Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. Hey, in this episode, I want to get into really an unpacking of the Fed's March 2025 meeting. We got the announcement just over an hour ago, honestly, and I want to kind of get into what happened, but do so against what I'll call the backdrop of changes in D.C. So we know there have been obviously a lot of policy shifts in D.C., and essentially it's created this building uncertainty that investors, business leaders, and consumers are all a bit worried about. So, for example, the S&P 500, in fact, hit correction territory, falling at 1 point over 10% from its high in February. And so, again, the Fed basically kind of is analyzing all this stuff. And, you know, we'll get into their policy, but also at this meeting, they issued what they call their summary of economic projections. So it's basically the officials providing their projections about where the economy is going, where inflation is going, all that kind of thing. And so let's get into it. So what I would say first and foremost is that policy was unchanged at this meeting in terms of the Fed funds rate. So the range is 4.25% to 4.5%. That's the target range, and officials left it there. They did modestly reduce the pace of their balance sheet reduction program, and that's just to sort of soften the impact of that change, but very, in my view, very, very modest. And so think of it as the Fed saying, hey, even in their statement, there's a bit more uncertainty, but we're going to kind of keep policy close to where it is. Now, with this summary of economic projections, or what they call their SEP, that provides a lot of data. And again, what they're doing is polling the officials and then providing the median response. But let's get into the numbers. So, for example, when it comes to GDP, recession, of course, implies negative economic growth. But the forecast from the Fed is basically a 2025 GDP growth rate of 1.7%, rising to 1.8% next year. Now, that is a little bit lower than the consensus average from sort of economists around the industry. But, you know, as people are doing their work, I would expect the median, or, you know, the consensus forecast average to start to decline a little bit. But the punchline on GDP is no forecasted recession at this point as it relates to economic growth. In the SEP, they also offer other projections. So, for example, unemployment at 4.4% at the end of this year, 4.3% at the end of next year. Those are good numbers relative to where unemployment has been. So think of it as still a solid labor market. They see improving inflation. So a median forecast for the end of this year for the PCE inflation index of 2.7%, falling to 2.2% next year, and then down to the Fed's 2% target in 2027, again, based on that median forecast. They do signal the median forecast to be 2 quarter-point cuts between now and the end of this year, 2 more next year. So we're reducing level of Fed funds rate. Their median sort of long-term neutral rate is 3%, and officials expect that to be reached probably after 2027 is the way to think about it. I did also check out Chairman Jerome Powell's press conference, and there was a lot discussed, but I'm going to tease out 2 specific things. The first was both in the statement and then in his press conference, there was a lot of talk about increased uncertainty. So just trying to unpack and understand what's going on in terms of policy shifts in D.C. and how those might affect the economy, inflation, et cetera. So an acknowledgement that the uncertainty is up, right? And then that can make people a little bit nervous. The other thing that during the Q&A of the press conference that Chair Powell got into was really emphasizing the distinction between what we're seeing and what they're seeing in soft data versus hard data. So we've talked about this. So soft data is basically things like surveys and polls and things like that. And the punchline is there's a lot more worry in that soft data. But when they look at the hard data, how the actual stuff that's happening, things are still pretty strong. And so the chair took a moment to kind of reinforce that point. So think of it as when it comes to looking at how things are actually going in terms of the hard data, everything's still in a pretty good spot. But the soft data makes you wonder whether eventually the hard data is going to soften as well. And of course, in the typical Fed fashion, a lot of sort of discussion about having to monitor data and wait and see and all that kind of thing. Now, this was sort of an important meeting, in my view, in the context of where we are in the environment, because the drumbeat of worry has been increasing, and so there's been a lot of discussion about sort of where and how policy changes in D.C. might negatively affect the economy and, by extension, the markets. And again, the market is sort of a leading indicator of that. So the fact that markets traded down a bit is a signal that people are really worried about that. But as we've talked about before, when we look at the hard data, things seem to be in a pretty good spot. And then we just reiterate that what's helpful about the Fed meeting is it's a bunch of really smart people digging into information as well, and then coming out. And I do think they really work hard to deliver their communication, their conclusions in an objective manner. And so the punchline is that, hey, coming out of this meeting was an indication that they think that employment's going to stay in a good spot, that inflation is cooling further, and that the economy is going to continue to expand. And so, again, that worry about recession, at least from what the Fed is saying in the wake of this meeting, they're not sitting there sort of all spooked or worried about recession at this point. So that's an important sort of, data point and conclusion as it relates to this meeting. Anyway, that's what I wanted to get into in this session. Thank you so much for listening, and we'll catch you on the next one.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.